It takes very few shares, very little power to move the market when there's no volume, there. So is our rally going to stand? I don't know. We're going to have to see what the market thinks about it on Monday. So far, they're pretty neutral about it. I'm still more focused on the short side at this point than I am on the long side. And the reason why is because we are in a downtrend and we're not showing any signs of an uptrend. If you look at all the moving averages, the 200-day moving average, the blue line, which is the 50-day moving average, the yellow line, which is the 21-day moving average, all of them are still pointing down. There's no reason for me to really think that, the market's going to go straight up. And even if the market does go straight up, how far does it really have to go? In my opinion, not a whole lot. It's going to take, you have to work through all these sellers in order to get back up. That's why I think the more profitable trade right now would be the short side. I'm focusing on the S&P 500 because the Dow Jones Industrial Average basically looks the same. You see, I changed from the S&P 500 to the Dow Jones, and there's not a whole lot of difference. INDU, basically the same thing also. Very, very nice downtrend that we took advantage of, and right now we're consolidating. The trades that I'm focused on right now are the market-wide trades, the spiders, the diamonds, the Qs, and we're looking to go short if the market keeps breaking support levels. So if the market is going to digest the MBAC news and going to keep breaking support levels, we'll go short. The indexes, not specific stocks, but the indexes. The MBAC rumors that the rescue plan is going to happen either Monday or Tuesday. We're going to have to wait for that because that's pretty scary. That can really rattle the market, and the market can go for quite the move on a surprise and surprise us with it. I want you to remember that trading is a business that the average is what really matters. And your trading every month is going to vary. Sometimes the market is going to go into a trend. Sometimes the market is going to go into consolidation. Sometimes the market is going to go into noise. And you have to balance everything out. When the going is good, make a lot of money. Maximize it. Save your money. When the going gets tough, when the market's consolidating, such as this, you have to stay on the sidelines. It's not like mutual funds where you invest a certain amount of money every month. Trading, it's the same thing as poker. If you get a good hand, you bet big. If you get a bad hand, you fold. You stay out. And that's what we have to do right now. We have to stay out until we get that good hand. And we're going to get that good hand when the market starts breaking out of this consolidation. So you have to vary the size of your trading in a way, your aggressiveness, your trading as the market goes through stages. Last month we had a tremendous month. We had stocks like PENN that broke out of consolidation, 58.46 down to 46. We had Global that went from 20.86 down to 17.61. We had FTO that went from 40.28 down to 30. We had LUK that went from 46.83 down to 39. We had CPO that went from 35.79 all the way down to 32. We had Dry Ships that went from 68, all the way down to 49. We had Cena that went from 42.65 down to 35. We had TIF that went from 40.68 all the way down to 33. We had PCU that went from 96 down to 72. We had RI that went from 23.81 down to 18. So when the market is moving, we have tremendous trades that work out extremely well because the trend is on. Don't get disappointed. Don't get stressed out about the market. The market goes through stages. And fortunately for us, the stages are much shorter term than the real estate market, for example. So the right time to enter into the market, the right time to start looking for trades is not after a large move. The right time is not after a large move. The right time is after a consolidation. This is when you want to start looking at the market. When the market is quiet, when the market is at a train station, when a train is about to leave is when you want to jump on, not when the train is done. So start watching the market right now as it's coming out of a consolidation. Right now as it's about to break support or about to break resistance. And make sure that you have the ammunition. Make sure that you have the right trades on right now in order to take advantage of it when it actually breaks out. Remember that most investors, most traders go in at the wrong time. The wrong time is after a move. The right time is before a move. And I do think that a move is about to happen, so pay attention. Anyway, that's the newsletter for this week. Hope you're using your index charts and drawing your support resistance levels on your index charts, and you're ready for the week that's coming ahead. Have a great week, and if you need any help, let us know. Take care.